Hey everyone, and welcome back to the Audit Guidebook channel. We're diving into our accounting series today, specifically Module 5. So, whether you're a student hitting the books, a new auditor getting your feet wet, or an entrepreneur trying to make sense of your financials, you are in the exact right place. We're about to connect the dots between three of the most critical financial documents out there. You ever look at a long list of transactions and just see a jumble of numbers? It really can feel that way. But here's the thing. Every single one of those numbers tells a tiny part of a much bigger story. The real magic is in how we organize them. So how do we actually go from that raw data to a clear, compelling story about a company's health and its performance? Well, let's jump in and find out. Every great story has to start somewhere, right? And in the world of accounting, that starting point is the trial balance. You can think of this as our foundation. It's the very first and maybe most important step in building the bigger picture that becomes the financial statements. So, what is this thing really? At its heart, it's a checkpoint. It all comes from that core idea of double entry accounting, where every single transaction hits two accounts. One gets a debit, the other gets a credit. So, it only makes sense that when we list out all the final balances, the total of all the debits has to equal the total of all the credits. It's our first big test to make sure the books are in sync before we do anything else. Okay, and here's a simple look at what we're working with. You can see we've got everything listed out. Our assets like cash, our expenses like salaries, and our income from revenue. But the most important part, look right down there at the bottom. The total debits, $26,000, match the total credits, $26,000, perfectly. This is that check I was talking about. It's our green light, telling us, yep, you're good to go. This balanced list is now the raw material for everything that comes next. All right, let's keep this moving. We've got our balanced trail balance. So what's next? We take those raw materials and we start to figure out performance with something called the profit and loss account, or just the P&L. This statement is designed to answer a really simple but totally vital question. Over a certain amount of time, did our business actually win or lose? Did we make any money? Now, to build the P&L, we pull very specific accounts from our trial balance. Think of it like sorting ingredients. We grab all the revenue accounts, which, if you remember, have credit balances, and then we grab all the expense accounts, which have debit balances. We're basically putting all the money we earned in one bucket and all the money we spent in another, just to see which one's bigger. And this calculation is so beautifully simple. We start at the top with our total revenue, that's $20,000. Then we list out all our expenses for the period, salaries and rent, and add them up. That comes out to $11,000. The last step, just some simple subtraction. And there it is, $9,000. That is our net profit. This one number tells us we won for the period. The business brought in more money than it spent. But this number is so much more than just a result. It is the critical link. It's the piece of the puzzle that we're now going to carry over to our final statement. Remember this number. So that brings us to the big one, the balance sheet. Now, if the P&L was like a movie showing our performance over time, the balance sheet is like a photograph. It's a snapshot. It answers at one specific moment in time, what does the company own, what does it owe, and what's the owner's actual stake in it all. Building this is a very clear process. We go back to our trusty trial balance one last time, and we pull out all the accounts we haven't used yet, our assets, our liabilities, and our capital. But, and this is the most important part of the whole explainer, here's the crucial step. We take that $9,000 net profit we just calculated on the P&L, and we add it directly into the equity or capital section. This is the moment where performance connects to financial position. And just look at how this all comes together. It's perfect. On the left side, you've got our total assets, cash plus accounts receivable, which adds up to $15,000. Now on the right, we take that original capital from the trial balance, and here's that key move. We add the $9,000 in net profit. And what do you know? Both sides balance perfectly at $15,000. This is where the whole story connects and makes sense. And all of this works because of the fundamental accounting equation. This is the bedrock principle of everything we've talked about. Assets will always equal liabilities plus equity. And it's not just a math rule. It tells a story. It says that everything a company owns, its assets, had to be funded somehow, either by borrowing from others, which are liabilities, or from investments by its owners, which is equity. Our net profit just increased the owner's slice of the pie, keeping the whole thing perfectly in balance. Okay, so let's zoom out and look at the whole journey.
I hope you can see now that it's not about three separate random documents. It's really one continuous, totally logical flow of information. It's an accounting pipeline that takes raw data and turns it into real, meaningful insight.
So here it is, the whole process, step by step. First, we record our day-to-day transactions. Second, we use that trial balance to make sure everything adds up correctly. Third, from that verified list, we create the P&L to measure our performance and find our net profit. And finally, fourth, we prepare the balance sheet to show our financial position, making sure we plug that net profit right into equity. See? It just flows.
This right here is the main takeaway. If you remember one thing today, remember this pipeline metaphor. The trial balance is the input. The P&L processes that input to tell us about performance. And the balance sheet is the final output, showing us the company's financial position as a result. It's just a beautiful, logical flow from one step to the next. So the next time you look at a set of financial statements, I hope you don't just see a page full of numbers. See the pipeline. See the story of how a company's day-to-day performance directly impacts its overall financial strength. Is it a story of growth, of struggle, or of steady stability? The answer is right there in the flow. Thank you so much for watching this explainer from the Audit Guidebook. If you found this helpful for getting a handle on accounting and audit fundamentals, please do me a favor and hit that like button and subscribe for more clear, simple explainers just like this one. And hey, be sure to check out the other videos on our channel to keep building your expertise. We'll see you in the next one.